All right, yes, perfect. So in the previous episode, we touched on time on the higher time frame. So that is very important, of course, using that economic calendar to see which day we actually want to trade. For example, here on Euro US dollar, this day right there would not have been valid if we did not have the actual economic calendar supporting the ID. Off of that daily value gap, we can continue higher to then see, all right, do we actually have news supporting the ID right there? So it's a checklist. First, we have price. Then after price, can we see, do we have news supporting the idea of trading that day? Yes, we can continue. Then the last checklist that we have is time on the lower time frame. So this is where our kill zones come in. This is where our sessions come in. Now, the first thing, and I'll tell you a little story as well. It's not going to be a long story, but it's quite important to understand. When I first got introduced to kill zones, to sessions, I thought this was some kind of magical time. And I thought it was a magical time where you would never lose. If I placed a trade during that time, I would never lose any trade at all. And I was very wrong. And I thought I did something wrong. I thought, do I just not understand it? What am I missing? Am I missing another special magic time? No. These times are not some kind of magic. It's nothing special. It's nothing secretive. There's nothing special about it. The way you want to see these times is simply understanding that there's volatility during those times. So the volatility happens again during those times on the lower time frame. So where if we want to know, is this PD rate that we want to trade off currently valid? Is this PD rate on the higher time frame? So the 4-hour, daily, weekly right there, is it actually going to cause right there on that specific day that we are trying to trade? On that Tuesday that we are trying to trade, for example, is this PD rate that we are now coming into actually going to be the cause that we move higher? That is where we have the higher time frame time. So that is where we use the economic calendar. Do we have news supporting the idea of trading higher right there off of that PD rate on the higher time frame? Now, to know if lower time frame PD rates are likely going to hold, so lower time frame PD rates, which is usually our entry, etc., are those going to hold? That is where we now need to make use of time on the lower time frame, which are our kill zones, our sessions. So to give you some underlying reason on why these kill zones provide volatility, that is because institutions, etc., institutions, big banks, they need to buy orders, as in they want to place an order, for example, and that order is around, they want to buy, let's do a simple 2 billion euro. I want to buy a simple 2 billion euro. All right, great. Well, in order for us to do that, we have to first go to some sort of central bank, and that will send us also to a settlement bank. That settlement bank is where the orders actually happen. So where the orders actually get filled into the market. They don't go to their typical MetaTrader and their trading view to place a trade and say, all right, let me just buy here, quick stop loss right there. No, it's a little bit more work. So in that settlement bank right there, that settlement bank has times to actually fill the orders. So of course, like just a normal bank, like just a normal company, they work during certain hours. So during those certain hours, they start working, they start filling the orders because that's their job. That's what they do for a living. So during those times, they actually fill orders of people that place their orders all around the world. Could be an Asia central bank, could be a New York central bank, or whatever the central bank in America is. Could be whatever bank you can think of. The Deutsche Bank in Germany, could be some other bank that wants to fill their orders. All right, perfect. So if we want to do that, then we operate during special times. Special times as in just operating hours. So those operating hours are what creates the kill zones. Now, you do not need to go too in depth on this. Again, this is what an algorithm is. This is what an algorithm that delivers the orders right there, that actually fills people in, because this is not done manually like it used to be. This is all done automatically nowadays, where it's just an algorithm that fills in the orders overall. That again sounds a bit weird in my ears. And the reason for that is because when I refer to an algorithm, oftentimes it's where people overreact and say, algorithm? Algorithm? Did you say algorithm? Ooh, tell me a little bit more about that algorithm. It's like, it's nothing special. It's really nothing special. Believe me, it's nothing special. It's just how the market functions, how the orders get filled in the market as well. So there's no special secret to it. That's all you need to know right there. So also, I would advise you to don't dive into that shiny object syndrome where you now, all right, algorithm, oh my, this algorithm is so special, because that leads to usually people not making any money. We are here, again, with the statement, with the philosophy, we're here to make money, not to figure out an algorithm. So the reason I just told you that about that algorithm is to understand why we have volatility during those times. So during those times is where the algorithm actually fills in orders. Those are the operating hours. So that is the only thing you need to know right there. That is very, very important as well. So that leads us to, all right, what is more important here? Is it more important to have those kill zones right there where orders get filled? Or is it more important on where we actually know the move is going to happen? Meaning, is it more important right there to have that news day where we know price will actually move higher? If I place an order in the market and I have a big order and I want to get filled, I do not really care if I get filled. I care if I'm actually right and if I'm actually making money on the long term right there. So I care if overall that day or overall the weeks and the months, because of course they are not day trading. The banks are not day trading right there. What they do care about is price actually going into my favor. Is price actually going to move right there? Well, we already know the world is rigged. The world is corrupt right there. So the financial world is not as fair as it you could say should be. But right there, that is a little bit corrupt because, well, a little bit, that is corrupt because they already know what's going to happen in the news. They have friends all over the world. They know what's going to happen. They know what they're going to announce. So they already know. They can anticipate what is going to happen right there. Perfect. So what happens? They want to know which day, which weeks are going to be volatile, which weeks, which days want to actually expand higher already, want to go lower. So the day on the higher time frame, because the higher time frame is where the orders are happening. So the higher time frame is also where the news, the economic calendar is linked to. It's linked to the higher time frame. So the higher time frame right there is the most important part because that is also what news goes off of. It goes off the higher time frame, not the lower time frame. Lower time frame is where the orders actually get filled, etc. slowly. That is where the kill zones happen. They are the least relevant thing, the kill zones. The economic calendar is the most important part. If you know which day is likely going to expand higher, that is where the economic calendar comes in because that is the high time frame. That is the most important part. So the news is superior to any kill zone. That is very important to understand. News is always superior to any sort of kill zone. So why do we say that? That is because we have different kill zones. And the kill zones that we use for Forex, we're going over Forex and indices. These, the ones you're seeing currently, are for Forex. For Forex, we have London 2 a.m. to 5 a.m. right there. I'm using a 24-hour clock, by the way. Sorry for all the AM, PM users. AM, PM confuses me a little bit when it comes to 12 p.m. or 12 a.m. So if I say that incorrectly, then excuse me. I use a 24-hour clock right there. So we have New York 7 a.m. to 10 a.m. right there. Then we have London close. We have 10 a.m. to 12 p.m. Correct me if I'm wrong on that one. That's 12 p.m. I believe. Then we have, and with I believe, of course, it's just counting up. So it's from 10 a.m. and we count 2 hours up to it. So it's 2 hours after it where London close actually closes right there. So that is important because I don't want you to confuse and think that that is all the way to midnight. No, because Asia range is from 8 p.m. right there to midnight. So that midnight is, I believe that's 12 a.m. Again, you can correct me if I'm wrong because I'm not super familiar with the AM, PM. I use a 24-hour clock. I've been used to that all my life. But that is 8 p.m. to 12 a.m. right there. So the midnight again. So those are the kill zones. Those are the sessions that we want to trade. Now, we also have London majors. And London majors right there, it says 2 a.m. to 10 a.m. That is the time for London majors where you want to get involved. Now, we also need to understand when I'm referring to kill zones and we're referring to entries, I am mainly referring to the 15-minute and below. The lower you go in time frames, the more you are going to need to use kill zones. So it's very important to understand as well that on the 1 hour and above, you don't necessarily need kill zones. You can stop, if you're trading the 1 hour, at just a news day. The news day is going to be the most important for you if you're trading the 1 hour and above. But 15 minute and below is where we now want to pay a little bit more attention, because we have more candles to work with, to the kill zones as well. So that is very important. That is the limit. 15 minute is the limit right there. That is where you would still use the kill zones. Everything above it, not anymore. Then we also have rollover hour. That is at 5 p.m. 5 p.m. every day for Forex, we have rollover hour. During that rollover hour is where you need to be careful, because if, and again, this takes into account only the 15 minute and below. 15 minute, 5 minute, and the 1 minute right there. That is where you need to be careful with the rollover hour. Depending on your position, depending on how far your stop loss is, depending on where your entry is, etc., you need to be careful there. With, as a general rule of thumb, if you take a 15-minute entry, then you're still fine. If you take a 5-minute entry and a 1-minute entry, and you're approaching rollover hour, then you want to close the position, unless your position is in a very safe place. The reason for that is because rollover hour is where the broker is now rolling over to the next day. So it's setting your position to the new day right there. So it's closing your position and it's opening your position at the same exact spot in that new day. So during that rollover hour, spreads will open up. Spreads, meaning where you will get filled, etc., they will open up. Meaning that you don't get filled on the actual place where your stop loss would be, for example. If your stop loss is right there and it's above that high and you're expecting lower prices, then if this was the 1 minute time frame, for example, then spreads open up. So the spread is not on Euro US dollar where it's very small anymore. No, they open up and your stop loss will likely not get respected. The same with those big 3 news events, where your stop loss will not get respected, meaning that you don't actually get taken out at the market at that moment. No, you might get taken out right there. So that is where you have to be careful, especially on the 1 minute time frame and the 5 minute time frame. 1 minute time frame, 5 minute time frame, close the position. 15 minute time frame is where you can still say, all right, I could hold this overnight if my position is in a safe place. A safe place is depending on, did it already run, etc. Break even doesn't matter, because break even will also not get respected if you actually hold it during rollover hours. So break even doesn't matter. We just need to take into account how far is our stop loss from our entry. Where is our entry overall? How far is the spread going to be that crazy? Also depending on your broker that you're using, which the broker we are going to use, also something, or we can use, not we are, but we can use, is what we're going to go over. But that is what we need to take into account overall, that rollover hour. That is quite important. So next thing is, again, 1 hour and above. You don't necessarily need to take into rollover hour unless you have, of course, a crazy 1 hour stop loss where it's actually a 1 minute stop loss. Of course, that doesn't make sense. So then you need to take into account the 1 minute still and you would close the position. But 1 hour, general rule of thumb, 1 hour and above, your entry is going to be fine during rollover hour. You're going to need to pay swap fees, which is automatically deducted off the trade you take. So don't worry about that. But that is what we need to take into account rollover hour. Now, why does this say London majors right there? Currently, we are going to talk about kill zones on Forex and indices. So indices is, again, the futures. It's not that specific. As in, we are going to go over it. It's quite easy to understand. In Forex, we have something called London majors, and we have something called Asia majors. Asia majors is called Asia majors because those are also volatile during the Asia session. As you can see here, for London majors, it's called the Asia range. That is because London majors are not that active during the actual Asia range, meaning that they consolidate, etc., and they just don't have that trend in them that we need in order for us to actually take profit. It's not what we want to see. So London majors is, well, first let's go over Asia majors because that will make it easy to understand. Asia majors are all the pairs, all the instruments that have, and this can be one of 3, Australian dollar, New Zealand dollar, or JPY in the name. If they have one of those 3 in the name, then it's an Asia major. If they don't have that, so they don't have Australian dollar, they don't have New Zealand dollar, they don't have JPY in the name, so either one of those three, then it's a London major. So let's quickly go over that as well to fully clear that up. Australian dollar, US dollar, Asia major. Why? It has Australian dollar in the name. EU, Euro, US dollar, London major. GBP, US dollar, London major. New Zealand dollar, US dollar, Asia major. USD Canadian dollar, London major. USD CHF, London major. USD JPY, Asia major. And that's the same for the crosses right there. Australian dollar, Canadian dollar, Australian dollar CHF, Australian dollar JPY, Australian dollar, New Zealand dollar, all Asia majors. Canadian dollar CHF, London major. Canadian dollar JPY, Asia major. CHF JPY, Asia major. Euro Australian dollar, Asia major. Euro Canadian dollar, Euro CHF, Euro GBP, London majors. Euro JPY, Asia major. I think you get the point by now. Every pair that has Australian dollar in the name, or New Zealand dollar in the name, or JPY in the name is an Asia major. If it's not an Asia major, then it is a London major. So that is where we now need to take into account different kill zones for the different majors. So London majors is where you want to place a trade between 2 a.m. New York local time. I'm always referring to New York local time, always, with every time that we have right there. And 10 a.m. New York local time as well. So between 2 a.m. and 10 a.m. New York local time, that is where you can place a trade on the 15 minute, 5 minute, and the 1 minute if it presents itself. The PD array that you are going to enter off of should always be created between 2 a.m. and 10 a.m. as well. That is very important to understand. This is where the most volatility happens. After that, you still have London close. That is not where you want to place a new entry ideally. You don't want to add a new entry onto that. That is the time where we still have some volatility left over. So if you enter late during 9:30 a.m., for example, then right there you want to say, all right, hopefully we can get that last push to still hit that take profit. If not, we might want to close the trade right there. So that is very important. So London majors, it's important to understand between 2 a.m. and 10 a.m. is where you can perfectly fine place any trade. So between London and New York right there, we have 5 a.m. closes London, 7 a.m. New York opens right there. Okay, then what is that time period? That time period is called lunch period. That is not relevant though, as in we can still enter during that period. So it's more important to understand that London majors between 2 a.m. and 10 a.m. you are allowed and you can perfectly fine enter. Any entry that presents itself, perfectly fine. As long, again, the reason why we can do that is because we understand news. We understand what the higher time frame is doing. We understand when the higher time frame is volatile. Because the lower time frame can be as volatile as it wants. But the lower time frame being volatile can be up, down, can consolidate still. What makes the higher time frame move is that news event again. So that news event is where we want to get involved in. That is where we want to get involved. The kill zone is extremely less relevant. It's not super relevant. The day that we are likely going to expand higher, that is relevant. That is relevant for when we actually want to trade. So this is again where London majors trade between 2 a.m. and 10 a.m. Then if we look at Euro US dollar, it's a London major, of course. We have this daily VWAP gap right there. Can we actually continue higher off of that daily VWAP gap? Well, first checklist that we have is price agreeing overall. We had the bias, narrative, boundary, target, etc. Yes, everything is agreeing. Next thing is, do we have news? So do we actually have a reason now to go into our entry pattern time frame? If we do not have news, then this Thursday right there would not have been valid to trade because it did not have the volatility to push higher. If we did have news, and we did have news at that moment in time, it is valid to trade because then we do have the volatility overall throughout the day to actually push higher as well. So then that allows us on that day, we can go into the 15-minute time frame. So you go into the 15-minute time frame right there once the PD ray is simply hit. At any given kill zone, can be Asia, can be New York, can be London close, whatever it is. Once we hit this PD ray in the form of that daily VWAP gap, you can go into the lower time frame. But you need to understand that Asia range right here for the London majors is not something you want to enter off of. So the ST that we create right there is, of course, we'd already not enter off of that because the ST is not enough for the 15-minute right there on the daily fair value gap. But it is valid to create the ST. The only thing is that the RE, so the fair value gap right there, higher, you always want a fair value gap higher between 2 a.m. and 10 a.m. right there. So let's say we are waiting to enter and we're just ahead of London and we already had the ST plus RE in Asia. Perfect, but we wait for London to create a new RE to get involved. So a new fair value gap higher to get involved right there. That's important to understand because again, London majors is the main volatility is going to be in London right there. So right here, we create this fair value gap in the beginning of London. Perfect. So now that entry is perfectly valid. When we create these fair value gaps higher already in Asia, it's not what you want to trade off of, but they have a high chance still of holding. So if Asia already displaces, then London will just likely follow through on whatever Asia already did. We just need that extra fair value gap, that extra confirmation in London to actually confirm the idea that we are indeed going higher. So that is very important. That's perfectly fine. As in, there's nothing wrong with that Asia already created that ST. That's perfectly fine. We can just follow through on that. So in that sense, it's just whichever kill zone right there between 2 a.m. and 10 a.m. Whenever we create those fair value gaps higher, that is when we want to look for those entries. So let's say Asia did something like this. Asia did not create any fair value gaps higher and consolidated inside the daily fair value gap. Perfect. All you're doing is you're not anticipating a sweep or any kind. All you're waiting for is a London ST and a London RE. That's all you're waiting for. Or even if it doesn't happen in London, you're waiting for it in New York. So that is how you would go about it right there. So that is basically all there is to it right there. Where every entry between 2 a.m. and 10 a.m. right there is perfectly fine. It's perfectly valid to take. On the 15-minute and below 1 hour, you don't necessarily need that kill zone right there. So that is perfectly fine to trade. So all we did again was going over the checklist. Is price agreeing? Yes. Is news agreeing? Yes. Perfect. Then we need that kill zone to agree in order for us to enter if we are entering on the 15-minute time frame and below. So this is for the London majors right there. Now, then we also have, of course, those Asia majors. Those Asia majors, if we, for example, take New Zealand dollar, US dollar. New Zealand dollar, US dollar right here, we have a weekly fair value gap sitting right there. Weekly fair value gap that we can continue higher off of, sitting right there. First thing we need to understand is that we want to trade the day that comes into that weekly fair value gap. So once we come into that weekly fair value gap, the first thing we look for is, all right, do we have New Zealand dollar or US dollar news to actually support the idea that we can already continue higher off that weekly fair value gap? If that's a yes, perfect. Then once we create, for example, a 4-hour fair value gap higher off of that weekly fair value gap, and then we want to go into the 5-minute time frame. In order for us to go into the 5-minute time frame right there, we always need to have that news day to agree with the idea of actually trading. The next thing we need is now the Asia majors, which is a little bit different. Asia majors is where you can take a trade at any given time. London, New York, London close, Asia range, whatever you want to do, you can take a trade right there. As long as you have news supporting the idea. The reason for this is because during these days and during these pairs, or on New Zealand dollar, US dollar, Australian dollar, something like that, JPY, those pairs, they are quite volatile during Asia range. So it isn't actually a range, it's just an Asia session right there. The Asia range becomes now the Asia session, which is perfectly fine to trade as well. So here you have basically 24 hours to get involved. Now, most people that would trade the Asia majors are people like me, for example. Currently, I am in New York local time, meaning that I don't have the time, or I have the time. I could do it if I want to, but I simply don't want to stay up all night to trade London. So if you're from Europe, for example, or even parts of Asia, then likely you want to trade London plus New York. So you would focus on London majors mainly. If you're from Australia, for example, or from New York, and you're like me in New York local time right there, then you would want to focus on Asia majors potentially. Because when I wake up, I only have New York to look at, and I need to force an entry right there in New York last minute to get involved. It's not what I want to do. I want to wake up and I want to see, New York right there is doing fine, and New York, I can start off with first look at New York, and then afterwards I still have the entire day to potentially get involved if an entry presents itself. Does this mean you are staring at the chart the whole day? No, it's also what we're going to go over in psychology, so don't worry. But on your Asia majors, you can enter 24 hours in a day. But before you take your notes, there's one specific time to it that you do not want to trade. So here it is not, for the Asia majors, it is not about where you want to trade. It's where you do not want to trade, during which times you do not want to trade. Where London is, you want to trade between 2 a.m. to 10 a.m. Asia majors, it's now where you do not want to look to trade. So you do not want to trade. And as a general rule of thumb, you do not want to even have positions open between 4 p.m. right there and 7 p.m. That is where on the 5-minute and the 1-minute, you do not want to have any positions over for that rollover hour. That is where spreads open up. That is where you can get, basically just screwed over, and you will experience slippage, etc., especially on the lower time frame. So 15-minute is, I would say, the border. It's the border where you could say, well, I might leave the position open depending on where your stop loss overall is. But on the 5-minute and the 1-minute, likely your stop loss is going to be too small, and you're likely going to get that stop loss hit, but you're not going to get filled at that point, meaning that it will likely mess you over. So on the 1-minute and the 5-minute, you want to definitely have no positions open on that rollover hour right there. Which means that if you want to trade Asia majors and you get involved for at 10 a.m., for example, in New York session, then right there, you want to take into account, all right, well, I need to take into account the rollover hour right there. So ideally close my positions before that. And if I do have that entry opportunity, for example, which will also sometimes happen, during that rollover hour, I want to wait for the rollover hour to be over first to then look to get involved. The rollover hour starting and the volatility dying is pretty known on every broker. As in, it's usually around, around 4 right there. The rollover hour ending is really dependent on your broker as well. It's not a specific time window. Rollover hour starts actually at 5 on every broker, but the volatility already dying and the spreads already opening up a little bit extra already happens a little bit earlier as well. Rollover hour actually starting happens at 5 p.m. Rollover hour ending can also happen in 10 minutes. On some brokers, it happens in 10 minutes and we start again where spreads open up again. But sometimes, and I'm taking in the worst case scenario right there for you to trade, where you wait for 7 p.m. right there to get involved potentially. Can also be earlier. That is something you just have to sort of experiment and just look at your broker on MetaTrader or whatever it is. What are the spreads doing at that specific time? Or even inquire with your specific broker. Brokers, again, it's what we're also going to go over later on, so don't worry. But right there, that is where it is a little bit more subjective and it really depends on your brokers. Sorry, I can't give you a definite answer on that. I'm just taking into account the worst case scenario, which is 7 p.m. right there. That is when you definitely can look to trade again for your Asia majors. So that is how you would go about trading Asia majors, where Asia majors, because they are very volatile in Asia and they have, for example, Australian dollar news, New Zealand dollar news. Those happen, of course, during Asia session. So during Asia session, it's going to be extremely volatile to trade. That is also where the volatility carries over into London and New York. The cycle starts again. The cycle starts again right there. So meaning Asia majors is where you have volatility mainly throughout the whole day. Where London is very specific. London majors are mainly focused on London or New York right there for their volatility, not Asia. That's why it's called the Asia range for London majors. The Asia majors you can trade again for throughout the whole day, as long as you take into account the rollover hour. That is very important. So what would that look like? Again, here mainly people trading Asia majors, you're likely, and again, you're not limited to only trading Asia, right? But it's mainly Europe, you have choice. As in Europe, you can trade Asia majors, you can trade London majors. You have quite a few choices. You can even trade indices, which we're getting into. If you're in an Asia time zone, where you're in Australia, for example, or you're in New York local time, you don't really have the opportunity to trade London, and it's going to be quite difficult to trade London. You can do it, of course, but I reckon that we don't all want to stay up to trade London, just specifically to trade London. Like, it's going to be more detrimental than it's going to be beneficial. That money to make right there is definitely not worth it over the long term, over your health. So right there, you're likely going to focus on Asia majors more so than on London majors. So when that is the case, then you want to focus on New York and Asia session more so. So that is very important as well to understand. With then the checklist being, again, is first just simply price. So bias, narrative, boundary, target. Is it agreeing? For example, what we went over right here, right? Is agreeing, price is agreeing. We did not come into the weekly value gap just yet. So there's currently no reason to get involved or anything. Once time is agreeing as well. So do we have a date that we can actually continue higher off of? Perfect. Depending on the time frame you are trading, if you take 1 hour, 4 hour trades, for example, the weekly value gap would be a 1 hour ST plus a 1 hour RE. That 1 hour ST plus RE is where I just need the day to enter that 1 hour RE right there. I just need the day to actually agree. So I need news day to enter that 1 hour entry pattern. For if I wanted to go into the 15 minute off the 4 hour ST and I want to go into the 4 hour to confirm the 5 minute or the 15 minute, for example, then I would also need that kill zone to agree. So that is very important to understand. Where overall, of course, you're also not taking entries on the 1 hour and the 4 hour between those rollover hours. That's also not something you want to do because that also affects the 1 hour and the 4 hour. But it is important to understand that if you're already in trade on the 1 hour and the 4 hour, you can leave them open if you have rollover hour approaching as well. As a general rule of thumb, depends as well on your broker. If your broker is out to hunt you, then, for example, B-Book broker, which we can get on into later on, then that's something you want to be careful of. But as a general rule of thumb, if you have a good broker, a good funded account, for example, a good prop firm, then they won't screw you over on the 1 hour and the 4 hour because the stop loss is just bigger overall. Where on the 1 minute, of course, you take into account 1 minute swing highs and swing lows that you potentially cover your high on, cover your stop loss. So that is where stop loss is overall smaller. That is where you need to be more careful. So this is just simply the kill zones right there for Forex, where everything stays the same. We look at price action, we look at that entry pattern. We now just need to add that extra confluence of having that time agreeing. We need to have that time agree overall. That is very important. With the most important part for Forex is those news days agreeing. That is the most important part. We need to have those news days to actually go into the lower time frame in the first place. That is very, very important to understand. Which leads us to the next point, which is the indices. So the indices right here are a little bit different because the indices, as a general rule of thumb, is where you don't want to trade anything that has to do with London, anything that has to do with Asia, etc. No. It's not where you want to get involved. So we have a market open here on the indices and on the futures, which is equities open right there. And equities open happens. And let me use this one right here. We have completely different kill zones right here. Where we have, first off, London is the same, but London is just not relevant. You don't want to ideally get involved in London. If you want to trade London and you want to trade indices, then you want to focus on DAX, which is German 40 right there. That is what you want to focus on if you want to trade indices and you want to also trade London. For London right there, DAX is extremely volatile at 3 a.m. At 3 a.m. New York local time, there's a lot of volatility going into DAX. So that is the same as your equities open that you have for ES, NASDAQ, and YM right there. Where equities open for your NASDAQ, ES, and YM, if we mark it, is equities open happens at 09:30 a.m. New York local time. Now, I think most of us are already familiar with that as well. That is where a lot of volatility comes into market. You could almost see it that equities open is almost like the big three news events. I like to compare it with that. Where London, you do not really want to get involved because equities open is around the corner. And equities open right there, being around the corner, is where you have a big spike towards one side of the market, and then we follow through and then we continue. It's almost like a big three news event where we just have a lot of volatility coming into the market at a very specific time right there. So when you wait for that, it's the same practice where you wait for volatility to come in to then look to get involved overall. That is very important. Now, then equities open, and the kill zone I want you to use on the indices lasts until 16. So until 16 p.m. Until 4 p.m. right there. So from 9:30 a.m. to 4 p.m. is where you can get involved in the indices. The lower you go on the indices time frame wise is usually indices and futures traders, they like to use a flow trading plan. And a flow trading plan is something we're going to go over. It's where you focus on one instrument. Focusing on one instrument allows you to also use the 1 minute time frame more. And using the 1 minute time frame more is where you're going to be more reliant on kill zones. Where equities open right here and the indices in general, I would argue it's not the same as Forex. It's not the same as Forex where your news day is extremely important. It's still extremely important. It's still extremely important to navigate around those news days. Yes, that is extremely important still. But the kill zones here, equities open, is more important. Reason for that is because on Forex, we basically have slow movement in the kill zones. And the kill zones are nice, but they don't have extreme volatility. It's the news that drives the volatility in the Forex market. In the indices market, it is the equities open. It is the market opening that drives the actual volatility. So the 9:30 and 4 p.m. right there, that is where you can look to get involved, where the news day itself, you mainly want to just take or watch out of those bank holidays. US dollar bank holidays is of course where you don't want to trade, where the market is usually also closed for the indices. And you want to watch out for CPI, NFP, and FOMC. That's still where you want to watch out because indices can still consolidate around those times. And that's still what they will do. But right there, if you see an opportunity and you don't have news supporting the ID for equities open, then you can still look to get involved as long as you understand it is lower probability though. It is lower probability to get involved. If you have unemployment claims, for example, for the US dollar, it is still higher probability to get involved on the indices, but it is less reliant on that news day where indices is very much reliant on equities open to happen. So it switches around. I hope you can see that. Where Forex, I told you, the kill zones are not super important as long as you have the news day supporting the ID. Where equities open, yes, news is still important. As in the general rule of thumb, NFP, CPI, FOMC, take them into account, etc. But news is less important than the actual kill zones. So kill zones is a little bit superior here on the indices, where the kill zone is mainly equities open, which is just 9:30 until 4 p.m. Now, we can get into the more specifics on this as well, where, for example, we also have power hour. When I refer to power hour, I refer to 3 p.m. until 4 p.m. That is the power hour. That is usually the last hour of the day, but that is usually where you see quite a lot of volatility coming into the market because the market is trying to finish an order they had filled, something like that. So the way you can see that is if the market still has one order to fill and it still needs to deliver to a certain price action to a certain level. For example, swing high, the context high, it needs to take out, the drawn liquidity it needs to take out. Then what will happen during the power hour? We'll see a lot of volatility coming into the market. So the way I want you to see that volatility is, again, that volatility is just the checklist. It's just the extra checklist where if you get your setup on that equities open right there between 9:30 a.m. and 4 p.m. for your flow trading plan, mainly what I would advise as well, which we're going into later on in the MLP week, is right there. That is where you can look to get involved. It's just your simple bias. Well, simple. It's just your checklist. Bias, narrative, boundary, target. Do we have that kill zone, that equities open to agree with it? Yes, we have equities open right now opening. If it stings into that PDRA where you now want to go into the lower time frame to look for that entry pattern, that is perfectly fine, and you can look to trade that on any given time frame. 1 minute, 5 minutes, and 15 minutes, which is exactly what the flow trading plan also consists of, which we'll go over in depth in the last week of this enrollment as well. This is the kill zone, the main kill zone for equities open, for indices that you need to be aware of. In between that, you also have a New York AM session, which is from 9:30 to, as a general rule of thumb, to 11 AM. Then you also have a New York PM session, as a general rule of thumb, that's also from 1 PM until around 4 PM. And you have the power hour. Those times is, again, it's the same as on Forex, where you have that time between London and New York from the 5 AM to the 7 AM. It's that lunch zone. Is not really relevant. And the reason, I'm also going to explain the why, because I don't want you to then go into other studies and say, all right, but I'm going to use this and I'm going to do that. I have been there. I have done that. I have already studied it. So the reason, and hopefully that helps, the reason why I do not use that, why I do not use the specific New York AM session right there from 9:30 until 11 AM and the PM session from 1 PM to 4 PM right there. The reason why I do not use that is because in between that 11 and that 1 PM, so in between 11 AM and 1 PM, you have New York lunch. So you have lunchtime right there where the market should be consolidating. That's a general rule of thumb, should be consolidating. That does not always happen. And when does that not happen? It does not happen when we come into a PD ray. So for example, on the 1 hour, if we already come into a certain PD ray and we just want to continue higher off of that, for example, that 1 hour for VGAP that we had before the drawn liquidity right there, is that in equities open? Yes, right there, 9:30 is right there. Let me mark it out. 9:30 happens right there. And that is actually, well, perfect example. That is lunch right there. That example on the 1 hour VGAP right there, sticking into it, that is lunch. And people, they try to tell you, but that's lunch, you should not get involved. That doesn't matter. It doesn't matter, again, because it's the whole equities open. It's at 9:30 AM until that 4 PM. That whole area right there is volatile. So once we come into that PD ray right there, it will not consolidate and it will show an entry pattern to continue higher. So that is very important because the way our strategy is based right there, and it's the same for London and New York, where between that London timeframe and New York timeframe, where you have 5 AM and at 7 AM, between those 2 hours right there, yes, that can consolidate. If it doesn't already come into a higher time frame PD ray, if it doesn't come already into a PD ray where you want to look for an entry pattern, then it's consolidating. Meaning that if you look and you only stay on the 1 hour time, on the 1 minute time frame, then it might consolidate right there. But if it comes into a PD ray, then you will just see your 1 minute ST and your 1 minute RE right there during a lunch, where the stereotype is it should consolidate, which it doesn't happen because we are just moving from that PD ray already. So the way I see it is when we are moving or when we want to do a task and we are working and we're just working our job, etc., and we are in the middle of achieving something, we're in the middle of doing something, do you want to take a break? Probably not, right? You first want to finish that task to then take a potential break. So if we're moving from that 1 hour PD ray to that 1 hour PD ray, which creates the 1 hour context right there, still in that drawn liquidity of that weekly VGAP we also saw, then right there, we're in the middle of doing something. Do we want to take a break? No, we want to stay involved and we want to first finish the task before we go grab a nice coffee. And here we can grab a nice coffee. There we can grab a nice coffee. So those specific kill zones inside the equities open kill zone, which is from 9:30 a.m. to the 4 p.m. Then you have AM session, PM session, you have the lunch hour. It's not relevant. It's not relevant because it's just purely based on whatever price action is telling you at that moment in time. If we have a PD rate, if we have that boundary, that context that we can trade off of, and then we can just simply go into the entry pattern as long as we're in between 9:30 a.m. and that 4 p.m. That's very important right there. So this is a beautiful example actually of today right there, where it just plays out in the equities open, even though people call that lunch hour, which is just garbage. That's just simply not true. So right there, that is also very important to understand. And that is the indices kill zones right there. Now, there's one specific rule to this kill zone on the equities open. That is if you already have major news, CPI or NFP on 8:30 a.m., then equities open afterwards will also be volatile, but it will just expand on what NFP was already doing. So for example, we had this example right here on last week. Last week's price action, 4-hour value gap right there. Then we came into it actually before equities open, because NFP is at 8:30. So it will already bring in a lot of volatility right there into the market. So right there, even though equities open also happened, so again, like we mentioned, it will just follow through on that. If equities open did not happen right there, you can just simply look to enter this as well. So if we already have 8:30 news in the form of NFP and CPI, which brings a lot of volatility, you can also already look to enter off of that without waiting for equities open. So that is quite important as well. So those are the kill zones, and that is the most important things you need to know about the kill zones, about the sessions, whatever you want to call it right there. So this is time. This is time that we went over right now. This is everything you need to know about time. We'll go into, of course, more as well when we get into MMP week, as in how do we combine this? How do we look at certain pairs? All that things. So thank you for listening, of course. And this is the end as well of the execution week, which of course is not the actual end. It's just the beginning, because now you learned the basics of a lot of things that we use as well. And then from there, we can build onto that idea as well. And the next week, so the next video is starting on psychology, which is going to be an extremely interesting topic as well. Because once we're actually executing, what do we need? We need that psychology as well to support the next idea. All right, perfect. Thank you.